Hello, everybody. Welcome to your every other day vlog with Andy at Be Libre. This is the eighth and final point, everybody, for the comment made by Matt in one of my earlier vlog videos where I was discussing Mark Blythe and his opinion of Bitcoin. Um, I'll go back to Mark Blythe. I think he's a very bright person. I think he knows exactly what he's talking about in many geopolitical, is the right term? Yeah, geopolitical, economical, global economical issues and terms, stuff like that. The man's brilliant. But as far as Bitcoin goes, I still think he is missing a few key points. I am quite certain that he understands how money works. And I don't think he's extrapolated far enough to see that the harder the money, the better the economy. The more knobs, bells, and whistles you put on currencies and monies, the more likely you are going to see a collapse, an eventual collapse of a market, of an economy. So yeah, this has been a lot of fun. I've had a blast covering each and every one of Matt's comments. He made 8 in total, and that's a lot. He put a lot of effort into it, and I hope that the effort I've put into it is shown, and I've tried putting my right foot forward in proposing my opinions, my rebuttals rather, to his critiques on Bitcoin. So without further ado, let's get into Matt's 8th and final point. He says, Bitcoin is not the dollar, the yen, the euro, or any major currency. Venezuela is also not the dollar, the yen, the euro, or any other major currency. Currencies do move, but really very slowly. Simple inflation, even when it adds up over a long period of time, does not destroy a fiat currency. The volatility in the dollar is 1 in 100,000th the volatility of Bitcoin. Fiat currencies are ultimately backed by the economies of the nations that issue them and rise and fall with those economies and other factors. Most importantly, though, fiat currencies are heavily regulated. This is extremely important for stability. For the dollar, even the inflation in the 80s, while bad, didn't even remotely approach the volatility we see in Bitcoin on a daily basis. And, in fact, the inflation served as a very important purpose that confuses the layman to this day. Debt and leverage got too high. Inflation essentially saved the middle class by devaluing their debt. Today, we have a very different situation. The middle class is fast disappearing, and many people carry credit card balances that are impossible to pay off precisely because wages are not rising and because inflation is low. Prices for some goods have gone up and down for others. And unfortunately, for some of the things that matter the most, such as education and healthcare, prices have gone up very steeply over a long period of time, many years, and not because of Obamacare, as many people would think, okay? Governments can certainly mismanage fiat currencies. It could be argued that the US's monetary policy is a disaster. But even with the volatility, that volatility in the dollar is pretty darn low. Bitcoin is far, far worse, because an entirely unregulated currency will literally destroy any economy that relies on it just from unaddressed fraud and criminality alone. So I wish I could start from the very end and then move back up. I mean, I could. It's my vlog. I can do whatever I want, but we'll go back top to bottom. So touching on major currencies. So Matt said that currencies could be either major, and I guess the implication when he brought up Venezuela means not major. So I guess weaker currencies. So you have your major currencies by the global superpowers, the US, the euro, the yuan or yen. So yeah, these currencies are in fact stronger than other currencies. And why would that be? I mean, it should be obvious that the superpower economies have a lot more economic growth as opposed to the smaller countries, and therefore the currency that backs them is going to be a bit stronger. But inevitably, over time, fiat currencies have always crumbled. We should not forget that fiat currencies are a new invention in economics and human social interaction. We have for the longest time have used hard money, so things like shells, stones, food, even rice, gold and silver. Right, of course, those are the most obvious hard monies. We have used those for centuries, thousands of years, as human economies, and those did not destroy economies. What inevitably destroys an economy is the immense fluctuation, destabilization of a currency. Even with hard monies, inevitably, even economies with hard monies would see their markets collapse if by some method the currency that they had been using regularly saw an influx of supply. So you saw countries that would use shells as a currency be completely destroyed, or maybe that's too strong of a term. We'll just see the market go into a bit of turmoil if another civilization entered the economy and found that they had easier access, or they had the technology to acquire massive amounts of shells and then dump those shells on this more primitive economy that struggled to get a hold of those shells to use as currency. So we can still, so even back then when there was hard money and not paper printed money, or typed out just money printed out of the digital ether, economies could still see a collapse with hard money. So getting back to Matt's point here, inflation does add up over time, and the dollar has only seen a devaluation. Inflation is never a good thing. So with the creation of a fiat currency, those that create it have the option of making more or making none, or increasing interest rates and contracting, in other words, taking back a lot of the currency that it releases. All these bells and whistles are actually detrimental to economies, and I would argue it's because there is no stability in the unknown. So when will the central authority decide to increase interest rates? We don't know. They decide, and only they do, and it happens behind closed doors. There's no way to tell when the next rate hike is happening in interest rates, or if they're going to decide to just print a bunch more money through quantitative easing. So if anybody is a savvy investor and they're holding dollars, they should know that you're gonna try your hardest to dump that dollar, or rather exchange it for an asset. No, this doesn't mean a shiny new car, because shiny cars depreciate in value right out of the lot. Doesn't mean a shiny refrigerator, although arguably more valuable than a car, still will lose value over time. I mean assets such as land. I mean things like investing in people who are starting meaningful businesses, entrepreneurs. See what else? Even your hard money. Going back to your hard monies, gold and silver. People have been savvy investors have been putting their money into things that actually gain value. They don't just hold their money in dollars. When people tell you, I have so many thousands of dollars in my bank account, and they say it like it's a good thing, you should question their I guess how savvy they are, economically speaking. They should be seeking to move. I mean, you always want some amount of dollars in the bank, because dollars are the quickest and easiest to get rid of, or rather, it is the quickest asset to exchange for something else. It is very liquid, of course, because it is accepted everywhere. We can go back and look at our history of Bretton Woods and whatnot. But yeah, the point I'm trying to drive home here is that fiat currencies have a lifeline. They are mortal. They are like humans. They eventually die. I think the oldest currency we have that's still in circulation is the pound sterling. That was created around roughly the 700s AD, and by what used to be Great Britain, and I guess it's always been readopted by the controlling government there, or ruling body there. So that was made. The pound sterling was made out of silver. Today it's made out of copper. If you think about the U.S., the money we use in circulation for the U.S. today, pennies and quarters, those are not made out of silver or copper anymore. So it would make sense why those monies are weaker than the pound sterling, which seems to typically do better, and that would be because it's more of a hard currency. Now, even the pound sterling sees inflation, as recent years there has been quantitative easing even for the pound sterling, and what inevitably happens, it loses value. Your economy should not be played with or tampered with, pulling on a lever for interest rates, or making more money out of thin air. that doesn't help anybody. What helps people more is a set, or at least parameters that can be relied on, reliable parameters where we know 10 years from now this is how much more of the currency is going to be created, and then I can take into account what kind of investments I'm going to be making. Am I going to be making short-term investments, long-term investments? That is what's dictated by more stable or reliable currencies. There will always be an inevitable collapse, or not collapse, but there will always be inevitable recessions. Money will always tighten up or contract and then be released again. But that stimulus doesn't happen because the central authority pulled on any levers. We've seen time and time again that the pulling of levers, it doesn't really matter if the economy was going to collapse, regardless of whatever tinkering a central authority tries to impose. The entire construct still collapses, and because humans are optimistic creatures, the phoenix rises from the flames, from the ashes. But it didn't matter at the end of the day what kind of movements the central authorities tried to do. So yeah, this inflation, Matt does mention the fact that those in debt benefit from inflation, but you're only seeing one side of the equation. What about those that made that lended money? They suffered quite a bit. Why would you want to be a lender if you didn't know that 5 years later the money that you're holding is going to be worthless, and the amount of money that you lent today is going to be worth a lot less when you finally get it paid back, which would tell you that you made a colossal mistake, a colossal error, and you wouldn't have made that error had a central authority not been tinkering with numbers. So again, reliability is key with money. Of course, I brought up the shells and how other more sophisticated civilizations dumped a whole lot more seashells when they finally realized that that's what the economy was using for their currency. But those are the black swans, and those are always going to happen. I would argue that the collapses, the rinse and repeat, the boom and bust cycles that we have are more a cause of the central authorities that we have. What Matt's talking about, where he mentions the fact that some goods go down in price while some go up in price, inflation nonetheless occurs. Just because some goods are seen to be cheaper relative to what the good might have been worth if the dollar was stronger before, the good would be a lot cheaper still. Sure, the goods are going to become, some goods will become cheaper, but that's thanks to technical or technological innovations. That's thanks to, unfortunately, cheap labor. Those bring us some goods that sure, they seem cheaper, while the assets that are more valuable, that won't go down in value, such as land and other hard assets, other organic assets, they don't go down in price. And why is that? It's because they're more a reflection of how strong or weak a currency is. So land is continually going up in value. Education is continually going up in value. Things of certain value, things of not absolute, things that are arguably valuable are going to demonstrate the true worth of a currency if they're continually going up. That should tell you that the currency is in fact devaluing. Knowledge can only go so far. We're only getting that much smarter every year, right? But the dollar seems to, the amount of dollars you have to put into an education seems to be exploding exponentially. It's not that knowledge is exploding exponentially. It's more that the dollar is just losing that much value. So yeah, this idea that governments certainly mismanage fiat currencies is very true. And as I said before, the U.S. has, regardless of whatever tinkering they did, an economy is going to fall regardless. And so I understand the idea that Matt's trying to get across here, that the dollar, while from day to day is not making much of a change, over a year it's several percentage points, and over 5 years it's quite a few percentage points, and over 10 years or a generation it's into the double digits as far as percentages go, and that's not a good thing. Over time, your money is losing value. Now, yes, Bitcoin day to day is extremely volatile. Doing business in Bitcoin is definitely a huge risk. I would not condone it. I wouldn't do it myself. I wouldn't base my entire earnings in Bitcoin, because if I needed to spend it tomorrow for groceries, would I have half the amount when I put meaningful effort the day before? And it's not a problem of Bitcoin. I would argue that Bitcoin is today, and in the few years that will proceed, will come subsequently, Bitcoin is still undergoing price discovery. We are not certain where Bitcoin's true value will eventually, land us. Where it will eventually sit. The same way the dollar today is slowly moving, because it has had plenty of time to really nestle itself in the U.S. economy first. It was more by mandate. The U.S. kind of forced it down people's throats, and then the rest of the world, consequently or inevitably. So yeah, the dollar is nice and nested in the economies. So the amount of value, while it fluctuates, it steadily goes down over time, but slowly. Whereas Bitcoin is only 10 years old, the dollar is over 100 years old, roughly, I think. So Bitcoin is only a tenth of its age, and needs time to really integrate itself into every economy that exists in the world. What is a result of that, or what it manifests as, is crazy volatile price / mood swings, where markets aren't sure what to do with this digital asset yet. But one thing is for certain: if you held Bitcoin since its inception, you would be sitting on a lot more money than if we compare it to the dollar. Had you been holding it 10 years ago and you're holding it today, you have, of course, lost value. Is that an argument? Is that a point of me saying that Bitcoin will inevitably always go up in value? That's not the case. What has happened in the past won't always happen in the future. And again, this is not financial advice, so don't go out and sell everything for Bitcoin. But my point is that Bitcoin must first become a household name. It must first become an asset. Gresham's law says that you want to get rid of the weaker money first and hold on to the better money. So people will, of course, be like I said before, the dollar is extremely liquid, so everyone gets rid of it really quickly, and is more interested, or rather the savvy investors are more interested in storing things that are actually valuable, assets that don't lose value, whereas dollars, they really try to get rid of that and exchange it for better things. Dollar makes the better currency today. Bitcoin does not make the better currency today, but over time, if Bitcoin does nestle itself in economies, maybe the setting price is 20,000. Maybe that's as high as it's going to go. Maybe it's going to go higher. Eventually, what happens with currencies inevitably is a currency stops being accepted because people see it as extremely worthless, and there must be a transition, or a transition must be made. Another currency needs to come up and be accepted as the norm, instead of this currency that people are no longer using. This has happened plenty of times before. We've had other fiat currencies that have been the standard, and then inevitably nobody wants them, and a new standard must come. And these are things that happen organically over time. It's not a night and day switch, although the way inflation works, or hyperinflation works, it does seem to be from one week to the next, the money is suddenly 10 times as worthless. Venezuela is a perfect example, which you brought up earlier. This is I think this is a really good point to end this eight question or 8-point rebuttal session on. Let's touch the last point. There was one last point, and it's regarding regulation. So Matt is stating that the dollar is regulated, and I've already stated why there really is no difference whether a currency or money is tinkered with. An economy is still going to feel and receive the blows of recessions, boom and busts. But my argument is that they'd be less volatile or less scary if we had a more reliable money inflation, I guess, parameters that showed us with reliability what interest rates would be one day to the next, which Bitcoin fortunately gives us. So yeah, this he makes a statement that Bitcoin is deregulated, or it's not regulated, and that it leads to crime. The dollar has been the standard for crime and drug dealing, cartels, all sorts of all the horrors of humanity that we could come up with. The dollar has been neatly nestled in that, cornering that economy. You can't say that Bitcoin is leading to more crime when the dollar has always been the standard. I mean, how much cocaine is likely on every dollar bill that you've exchanged? Residue, of course not. Whoever had it took care of that. But yeah, it's an absurd statement to say that money itself is responsible for crime. Money is actually agnostic. Money doesn't care what you do with it. Societal norms and the current zeitgeist of the population is what determines what crime is and what people use for crime. But the token, the currency itself doesn't care what you do with it. All it's trying to represent is value over time. So yeah, in fact, Bitcoin's current price, or the way that Bitcoin functions in markets, I would argue gives us a true value. So whatever Bitcoin is worth today is a lot closer to its exact precise economic value compared to other currencies that don't have 24/7 markets. So Bitcoin's markets, I would argue, are extremely robust, extremely resilient. They're anti-fragile, as Nassim Nicholas Taleb, one of his great books on the concept of anti-fragility. Bitcoin is always under duress. Bitcoin is always under pressure of buying and selling pressure. No market is ever asleep on Bitcoin. If there is any reason to be trading Bitcoin, there is no closing of the market. The stock market conveniently rises from bed, not too early, but just, at a nice 8 o'clock in the morning, and then closes and then goes to bed. People can sleep on their concerns. People can sleep on their ideas or whatever. Bitcoin never sleeps. Bitcoin is 24/7 being traded. It's a ship that's out in the ocean 24/7. Not just the market itself, but the technology itself is working 24/7. There is no rest. There is no bank closings. It doesn't care that people need to go to bed and sleep. It doesn't care that bankers are tired and they're done dealing with people's crap. Bitcoin always works 24/7. This is an extremely powerful concept, and not just a concept; it's a reality. Bitcoin works. So yeah, I think this is the true point to end this whole series on these 8 comments made by Matt. Again, Matt, I want to thank you for putting out these ideas. I think they were great. I think you put a lot of effort into them. I hope my effort going into responding to them shows through. Guys, in the comment section, if you want to state, if you want to correct me on anything that I might have said, or if you even have more critique of my comments, please bring them up, and I'd be happy to address them on a future video. I love doing this. I really enjoy this process where I get to think out my ideas, my concepts, and do my bit of research and try to bring out these fleshed ideas, I hope. But yeah, this has been a blast, and I'm going to continue doing vlogs. The next few days are probably going to be videotaped on my phone and just released through there. I'm going to try to finagle and see how well the YouTube recording works on my phone. It's my sister's wedding, and I won't be near my awesome computer, so it's going to be just my phone, just my little computer. So yeah, guys, I hope you enjoyed this series. I'll probably do more like these in the future if other great commenters like Matt show up, or I'll just look up other Bitcoin critics statements and ideas and stuff like that. So yeah, until next time, please like if you like, please subscribe, please share with a friend. Until next time, bye.